It's Wednesday, September 21st, 2016, the autumnal equinox, beginning of fall. This is Ron Feinstein, the Consummate price behaviorist at New Wave Forecasting. We'll do the R&R of the markets and what I think is going to happen tomorrow. We're going to start off with gold, and was that a spectacular market call or what? I was talking about how the next $10 was going to be up, and turns out it was the next 20, almost $30 that are up so far. You know, we did hold right in the danger zone that I was talking about, and this upside breakout, I put out an intraday post today when the market was trading around 1330, suggesting 1340 and or 1345 were the realistic targets as the 62 and 76% retracement. So we've already made the 62%, and it looks like we're going to make a run for 76% near 1345. So we'll be watching that tomorrow. The market is overbought, but there is a chance there's something even more bullish going on here. So we'll just have to see how the market does. If it dips, where it holds support, if there's any wave overlap, and also if there's any momentum divergence. At the moment, there isn't any. So this looks like a pretty solid rally underway at the moment. You know, I always talk about the relationship between the euro and gold, not so much because I care about where the euro is going, because I more so care about where gold is going. You know, I thought this was some kind of a weird setup here. I noted that, you know, we just cannot rely on everything here. There were buyers below 112 before, and even though we may have washed out where they were, there were still buyers. And now the market actually looks pretty bullish. You know, how much selling we'll find again near the 112.51, 1260 remains to be seen. But I got a sneaking suspicion that this market may start to do better. And if it does, I'm going to be likely changing my official timer digest position back to bullish. You know, I have switched back to neutral a few weeks ago, and that was a real timely move. But I think it may be time to, you know, come back in again, and we'll see how the waveform works tomorrow. But again, this could be a much more important bottom than I'm suggesting here. The wave count here actually says we're going nowhere in a hurry, but we'll see what happens tomorrow. Big day tomorrow. As good as the gold call was last night, the call on the 10-year today I think was just outstanding. You know, after the market, I've talked about how these triangles are really dangerous when they become so obvious, and look what happened. They kind of wasted this one early in the session, and all it did was mess everybody up, as B waves are known to do. After the market came back up again, I noted that we have a courtesy dip scenario and that the 62% retracement was 130.09. I believe the exact low was 130.08 on a little double bottom, and now we're trading at 130.24. So looks awfully good at the moment. I guess the big risk to the bullish case here is that this really is just an ongoing triangle and maybe not as bullish as I'm making it out to be. But again, if you recall, I was suggesting all week that the market was ultimately going to resolve to the upside, and it may already be underway. So we'll have to see. But again, got to like this market still. If we fall back below 130.16, I start to wonder about it. But at the moment, that looks to be the breakout level, and I like being long the notes. I think it's still the right side of the market, so we'll see how it fares tomorrow. Well, the nat gas was a textbook New Wave Forecasting courtesy dip scenario. Whether or not that was enough here today, I just don't know. It easily could have been. But again, I was looking for a pair of 4.5s here, so even if the market does run up to a new high, there should be one more courtesy dip to come. And frankly, we'll see. Kind of momentum is definitely lacking here, but I think what would be better from my perspective would be a washout of 305 on tomorrow's number. But, you know, it is Thursday tomorrow, so we could easily spike up above 310 on the number and then come back down again and wash out 305 or something like that. But, you know, this market appears to be headed higher still. It's just a question of where we find the best opportunities to try to buy the damn stuff, because it sure looks like it's going to go up towards 315 in the immediate future. You know, I think this was another really outstanding call here. The turn in the crude oil had a pretty good session here today. There's really no wave overlap coming up. The 62% retracement for this decline is around 46.30. And I don't know. I suppose it could be pretty bullish, but we're really overbought right now. So I don't know that this market's going to accelerate. But I can say this, if it does start to accelerate, this could very well turn out to be the point of recognition of a third wave, and that is not what I would be looking for right now. But gee, you know, I'm an open-minded kind of guy. So we'll see. If the market starts to roar from here, we're going to retest this recent high at $48. I just don't know if that's in the cards, but I'm not going to say it's not going to happen. Okay, I suppose we could say that the Fed made my Treasury note forecast work out, and it did make my stock forecast not work out. So it does turn out that the triangle in the S&P is some kind of a bullish consolidation, and that the market is probably going a lot higher. I didn't really think this was the most likely outcome, but it doesn't really surprise me because, again, the triangle was just so obvious, and I think everybody in the world believed it just had to go out the bottom. So I like the market. We'd have to fall back below 2143 to neutralize what looks like a very powerful short-term situation here. But it's tricky coming on a Fed report. You know, all I can say is as long as we're above 2143, whatever the reasons that the market's rallying, it should continue to rally. The minute it falls back below there, in the remote event it does, then something weird is going on, and we're still stuck in a stupid range. But at the moment, it looks pretty bullish. Courtesy dip set up. I'll be looking tomorrow. If we see any small ones, put them out on a real-time intraday update. Okay, finishing out the session. Talk about the NASDAQ, and all I can say is you don't have to hit me in the head too hard before I figure out what's going on. And this is clearly now an impulse wave, and it's going higher as well. Boy, I don't know. We probably won't fall back below that 47.90 level that turned out to be just so important here. So again, that's pretty much it. I think as long as we don't hold below there, you know, we are be looking for a rally towards 4,900, give or take, and then maybe a pullback towards 48.30, something like that. Courtesy dip scenario. This chart is essentially the same as the natural gas. So again, just looking for a textbook Elliott wave sequence. Hopefully this one will be a little easier to determine when we can find that wave 4. But again, don't necessarily want to chase it, but there's certainly no reason that I can think of to want to be short this thing. And again, I just want to be looking for an opportunity on the long side. So that's it. What an interesting day. You know, the Fed certainly turned the markets back up. And, you know, I'll be back in the morning with real-time updates, and tomorrow night with the R&R. So once again, September 21st, first day of fall. Ron Feinstein, New Wave Forecasting. Have a good day.